Okay, so we are live. Hi everyone. Good morning. Good to have you here. You are welcome to the Africa Venture Studio webinar. How startups can de-risk diaspora capital and attract foreign investors. If you are here with us, kindly just mention your name, your location, and your startup name so that we know the founders here. So we want to see founders speak up, your name, your location, and your startup name, what you are working on, so that we know the founders here. So I can see a couple of people joining in. So while we are waiting for you guys, we have with us two amazing guest speakers for today's webinar. We have with us the first person is Jennifer. Hi, Jennifer.
Hi, Pascal. Hi, everyone. I don't know if it's my settings. I'm not able to see the joiners.
I'm not sure you can see it from your end.
Okay. So if they have
Yeah.
questions, it'll be in the chat. So,
Yes, yes.
okay,
This is
great.
you.
Okay, perfect. So, hi, everyone. Thank you, Pascal, for the invitation and looking forward to this conversation with you, Axel. So, as mentioned, my name is Jennifer. The accent you're hearing is Canadian. So, born and raised in Canada, but my background is Ghanaian. I'm based in London, UK. So, for a bit of context, how I actually got my start in venture was here in London. So I started out doing a lot of work with some early stage founders, working with large corporates, the government of Ghana and the UK government to design different venture development programs. So think accelerators and the like. And this was predominantly for early stage founders like yourselves, is what I believe is the makeup of today. And then eventually for later stage startups as well. Then I started to transition to work a bit more on the continent. I have a bit of a bias. I have a bit of a keen interest in Francophone Africa. I don't know if there's any Francophone African founders in joining today. And now in terms of the work I'm doing, it looks a bit differently. So I'm working in private capital on the continent, but on the other side, now a lot of the work do is looking at mobilizing more domestic institutional capital, so working with pension funds and the like. So looking forward to this conversation. Thank you for having me, and I'll pass it back to you, Pascal.
Okay, thank you very much, Jennifer. So I think Jennifer has pretty well done her introduction. Just a quick summary. She has a background in private capital technology law, and she's focused on bridging the gap between investors and high growth opportunities across Africa. And she enjoys supporting founders who are building game changing businesses. Good to have you here once again, Jennifer. So we have Axel. Mr. Axel is a serial entrepreneur and investor and the co-founder and CEO of Auto24 Africa, which is Africa's leading online marketplaces for certified used cars backed by the Stellantis and operating across 5 African countries, as well as also is the co-founder of EV24.Africa, Africa's largest electric vehicles marketplace online. He has built and scaled marketplaces and tech platforms across Asia, Africa, and Europe. He has extensive experience working with cross-border capital, international investors, and strategic partners. He also he is also an active angel investor in over 50 African startups, supporting founders with funding, operational expertise, and global networks. He regularly shares insight on scaling in emerging markets, fundraising, and building investor ready businesses across Africa. Good to have you here, Axel.
No, thanks, Pascal, and good morning or good afternoon, everyone. Happy to be on the chat here. Happy to answer some question, and thanks for the intro, Pascal. Very long story short, but yeah, I'm on both sides of the table, entrepreneur and business angel. So a business angel, as you've said, I've been doing it in a lot of countries on the continent, in a lot of industry. You can find me on LinkedIn if you have anyone has some pitch decks and etc. to share. And on the entrepreneur side, I'm the CEO and co-founder of Auto24 and which is a marketplace basically. So and I've been doing that for some years. So happy to share some insights here.
Okay, thank you very much, Axel, for that. So, as he has mentioned, founders here, you are free to reach out to him for investments, to your pitch deck, or whatever you need to reach out to him. He's very active on LinkedIn. So, let's delve into the topic of today: how startups can de-risk diaspora capital and attract foreign investors. So number one is de-risking. You have to de-risk the capital for investors before you actually attract them. So when we talk about diaspora plus capital, we are talking about money from Africans living abroad. This could also be for foreign investment. Then when we are talking about de-risking, we are looking at how you can make your startup look safer to invest in. If you attended our last webinar where we talked about compliance for startups from day one and how it makes your business investable. So that's the same thing with de-risking your startup from day one so that investors don't feel unsafe investing in your startup. So to start this conversation, let's start with Jennifer. So Jennifer, diaspora investors often understand Africa emotionally, but remain cautious financially. What are the biggest risks they perceive when investing in African startups?
Perfect. Thank you, Pascal. So I think we can break this up into two groups. So it depends on which diaspora investor you are referring to. So we have retail investor, like Pascal mentioned, he's active in the angel space. So those writing small ticket size or personal checks, the fears might be stemmed for more personal experience, say with like opaque legal resources or currency loss. And then if we look at the other side of the coin with institutional investors, the risks are more structural. So think pathways to liquidity, expectations with LPs that are misaligned with African market timelines, and just the overall fundraising environment. I'm sure you're all very familiar that in the last few years that we've seen fundraising contract quite a bit in the continent. So if we look at the first group, so retail investors, some have personal reference when it comes to like currency loss. So for example, I'm Ghanaian. I've seen the city shift from like $2 to $3 in around like 2013. That's when it was doing decently well, to closer to 15 to the dollar more recently. And that kind of swing kind of makes you take pause before even writing like a small ticket size in local currency, because it immediately raises the question, what happens to the return you're expecting when you convert it back to dollars or pounds? And I think a lot of other people in the diaspora have seen this. They've seen the fluctuations with the Naira, with the Egyptian pound, and various currencies. And another thing too is with retail investors, say they are participating from very early on. So say like a friends and family round. So if the investment doesn't pan out the way you are hoping, and say you are part of a friend or a family, the loss can be both financial and relational, right? So if you're getting involved in a round, as like an early mover, etc., and it doesn't go as the way you planned, that could kind of like create and entrench those fears that you may have in like investing in the continent. For diaspora and fund managers, the risks are a bit more structural. I'm going to be referencing some data. So if you look at the 2025, and I think this is a good read for all founders. So if you look at AFCA's 2025 Venture Capital in Africa report, some of the things that were stated as perceived risks by a lot of fund managers is FX volatility. I know this is not coming at any surprise when we're talking about emerging markets, but at the fund level, this hits quite differently. It's not just about one investment, but it's about losing value on your entire portfolio before you've sent any capital back to LPs, right? Another one that's cited quite a bit is liquidity pathways. This is always a persistent concern. So just some figures for you. So the data shows that exits reached a record of 34 in 2025, which is actually generally very encouraging. But if you just segment those figures a bit more, you see that the exit to investment ratio is still only 0.08 times, and public listings account for just 4%. And you compare that to the globally, which is at 15%. So in this context, fund managers have to explain to the LPs how the capital is going to come back and when is it going to come back. And the reality is that in the African context, that it just differs from global trends. Another factor that's cited quite a bit is, and that's stifling the ecosystem, is just the availability of later stage capital. So there's like a late stage drought that's happening right now, as the data shows. According to the same report, none of the 35 founders that raised Series B in 2023 and 2024 had progressed to Series C's by the end of 2025. And this should instantly just give you pause, because it means that even well performing companies can stall, not because the business is failing or not doing well, but because the next layer of capital is just not available. So what happens? This then extends timelines and creates additional pressures with LP expectations. And we can't have this wider conversation about de-risking foreign capital without looking at the overarching fundraising environment. So a bit more stats for you. Africa-focused VC fundraising fell to 87% year on year to just $107 million in 2025. And this was the first year ever since 2021 where a single fund close above 100 million was not reached. So what does all this mean? It means that it shrinks the co-investor data pool that institutional investors are looking to for validation. Follow-on capital is harder to come by. Like I said earlier, that progression from Series B to Series C became incredibly more difficult because just that layer of capital didn't exist. So now fund managers are not just raising in a difficult environment. They're operating in an environment where the broader infrastructure supporting the portfolio is just getting smaller at the later stage. So these are just some of the factors that have cause like perceived risk, but they've also led to some opportunity. What we've seen as well is just the rise of private debt, especially at that later stage when that follow-on capital is not available.
Thank you very much, Jennifer, for the deep insights given. So over to you, Axel. I don't know whether you have any additions to what Jennifer has said.
Yeah, and also that was a very good answer, and thanks Jennifer for all those insights and those numbers. No, after I will just reiterate a bit, I mean, Diaspora is of course can be a big support, in helping local startup from any country, and whether we are in Africa or any other continent as well. Diaspora or local investors, I would say, are very important. But the thing is, of course. They can be more or less risk adverse, and this from a different point of view. So Africa is still, once again, from a global VC perspective, receiving only a small portion of what's happening. Africa is about 20% of the world population, but it's only about 1% to 2% of the global VC capital. There's a lot of potential, as we all know, of course, but there are risks. Risk can be currency and macro volatility, risk about execution, of course, like in any startup, and risk about governance and transparency, like in any startup as well. And I would say that sometimes Diaspora, especially what I've seen in Africa as well, they can be a bit more kind of stressed about this type of risk because they have as well themselves their own a kind of vision about their own country and their own as well entrepreneurs. So because of that, they can be a bit stressed about investing, etc. as well. But that's something we need to push. So that's why the storytelling is important. It's important to have this kind of conversation like we're having now, and to share things like Jennifer is doing or I'm doing on the social network, especially on LinkedIn, to once again push the story a bit further.
Okay, thank you very much for the addition, Axel. Um, so let's move to the second question. What are the top three signals that convince foreign investors that a startup in Africa is credible and investable? Axel, do you want to go
Yeah. So
first?
yeah, so very simple. Three signals, I would say, to convince once again for investors. So the team first. The best is the team. People invest in people more than in ideas. Never forget that in any of those biggest ideas around the planet, I would take the example of Airbnb that we all know, for example, is it's about people. Airbnb at the beginning was also a very humble startup. They were really struggling as well to raise $150,000 back in 2007. So it's not that far, it's not that long ago, and they struggled as well to raise $150,000. So exactly the same thing as we see in Africa, but it's all about the people. Invest in people first, then the story will come. I have stories myself about investing in guys. They were on a specific project. The project didn't work. They pivoted completely differently to a totally different business and even a different geographies. And now it's an amazing business. Secondly, of course, that's the market and the industry. You need to see where there can be revenue, what are the unit economics of that particular market and industry, etc. And last thing is also what I would call the institutional credibility. So how basically we can make this story or this business credible in that sense. So it would be my three signals in a nutshell.
Thank you very much, Axel. Jennifer, I don't know whether you have any additions to what Axel has said.
Yeah, thank you for those, Axel. Just to build on that, I think another thing that really is a strong signal to foreign investors is a high quality lead investor. This is especially helpful for foreign investors that cannot easily conduct on the ground due diligence. For example, let's use a hypothetical example of Partech. So say they're investing in a company in Cote d'Ivoire and the fund headquartered in Belgium gets wind of this and they're interested in participating. The great thing about this is that Partech actually has a base in Dakar. So they're able to do a lot of that on the ground due diligence and just a lot of that modern monitoring. So this is like a signal for the Belgian investor, this is a quality investor and they already have that on the ground knowledge. So that's another thing, a high quality lead investor. Another big thing is, and I think this is not spoken about as much, but local capital validation. So essentially what I'm talking about here is foreign investors are comforted when we see local investors also participating in this round. It provides market knowledge, on the ground validation, and just alignment with domestic realities. In terms of the data, that report I mentioned earlier, the Africa 2025 Venture Capital Report, it highlights this. So there were 625 unique investors that were active in 2025, and with African investors now comprising the largest single group for the second consecutive year. So this is exciting. This is great news. And just having those credible local players also investing just signals that local market validation. Just think about it this way. If a foreign investor sees a company, then there's no local investors involved. Why should they then participate, right? It raises a red flag if there's credible local investors that don't want to participate in the round. So having that is very important. And Axel touched on this a bit earlier, and it's not so sexy, but it's very important. It's just being institutional ready when it comes to your governance. So just think clean documentation, clear cap sheets, reporting cadence, just being ready to receive institutional capital. Right now, we've seen that fundraising has become very difficult on the continent. The high years of 2019 and 2021, where you could just easily raise on like a compelling narrative and a pitch, is behind us. I'm so sorry, the glory days are behind us. So investors now are being a lot more, they're scrutinizing a lot more. They want a lot more transparency, right? So it just takes the risk out when you're able to provide that at the early stage. So as founders right now, that's what you should be thinking about. So just wanted to add those 2 points. Thank you.
Thank you very much for that addition, Jennifer. So, founders here, if you have any questions, you can send in your question on the founders group or in the comment section of this conversation. Type in your question here, or you can send the question on the founders group. So, the next question, so to Jennifer, what are some mistakes African founders make when pitching diaspora investors or international VCs?
Yeah, I think a mistake that a lot of founders make, obviously you become married to the problem when you're building a solution for it. You're involved in these markets day and out. Like you understand them, you grew up in them, you understand it deeply, right? But the assumption that sometimes can be made is that international investors, especially who are headquartered elsewhere, have that same context and that background experience, which they do not. So when you're pitching, and maybe unfortunately or fortunately, your role becomes dual, right? You pitch the business, but you also have to give a crash course on the market. I saw a quote like many years ago, and I had to dig through my notes to find it, but it was a founder of a company called Ijara. So basically, so she's a francophone African founder, and I feel like francophone African founders have like a unique, I guess, a little bit more of a hurdle to climb, just because it's just not as popular as a region. It's changing, but it's still just not where it needs to be. But basically, what she said is, was for both my seed and Series A rounds, I generally had to start my pitches with a map of Africa, as most investors were not familiar with a part of the continent and the opportunities herein. So that, I think that just like perfectly encapsulates like the problem. Like, don't assume that they understand the market as well as you do. So build that into your pitch, right? Um, Again, another thing is that some of the markets, if not the majority of them that you're serving, are informal. So it's important to convey how the wider infrastructure will support the solution or support your solution or hinder it. And if it's the latter, how do you plan to address that? And I had this conversation with a francophone African founder, and it just encapsulated that very perfectly. So basically, with her solution, she needed access to data when it came to like spending power, right? So there was like there's a lot of data opacity that just existed when it came to like the actual market size. So they had to do a lot of the operational work to like just gather that data, right? That was not the solution that they were solving. They weren't trying to start like a statistics company or anything, but they needed that data to like release their solution into the market. So it's not just about solving the problem alone. It's how is the wider infrastructure going to support it, and how are you going to feed into that? So for them, they had to do a lot of that like on the ground work when it came to gathering the data. And when I was speaking to another founder, this one was a Ghanaian, this one, same thing. So he has like an agri-tech company that's doing quite well now. But he's like, one of the things I realized very early on is that there's a wider infrastructure that we had to build that we didn't factor in initially. Yeah, so I think those are a few ones. And another one is, and I'm always willing to die on this hill, do you actually need to raise venture capital? Is that the best route for you? Do you actually understand what the ramification when it comes to VCs? There are different alternative routes that we're seeing coming to the continent. But yeah, I'll leave it there because I don't want to ramble. I'll pass it over to Axel, who might have differing opinions.
No, I think it's the same. Thanks. Definitely, we are in the same space, so we see the same thing, and there's a lot of common practices, etc. But definitely, yes. The first question will be: do you need to raise capital? That's an important one. Then, of course, some milestones in terms of product market fit, traction around some early stage revenue, operational data, and things like that. And I think in Africa, I've seen it myself with my personal business or with other business I've been supporting. It's better to come with all these things already, you know. So at least to have a bit of a product, especially now in 2026 when you can build products very easily with the help of AI, you know. So come with a product is better to have something kind of clunky but working, but to start with and yeah, already working in a way than nothing, and then with a bit of traction, someone paying for something, etc. That's the best. I would never personally now invest, I think, in startups with no revenue or no product, especially on the continent and even around the world, because now it's possible to do it. I think we're coming to this kind of golden age where we can build stuff really like very easily, once again with the help of AI. And that will give a tremendous opportunity in terms of value creation for entrepreneurs anywhere they are on the planet, whether they are out in the countryside in Ghana or in Kenya, etc., or they are in the middle of a bustling city in Europe, etc. I think it's bringing everyone to have the same kind of chances and possibilities to do stuff, which is amazing.
Thank you very
Sorry,
much.
sorry to interrupt, Pascal. I totally forgot about this one. One I forgot to add is geographic expansion. African markets can be small and fragmented. So from the early, like just from the early stage, you need to start thinking about how am I going to expand to like the next market, right? And just build that into your pitch. Because say you're a founder in Lusophone Africa and like the market you're serving is Angola, that's great. But how do you plan to then expand regionally and just wider, like just in the continent more generally before you even start thinking about international expansion? Just build that out very early on so that they can see like the market size growing and like market that you're serving like continuously like growing. Sorry, back to you, Pastor. I just forgot to add that.
Yeah, thank you very much, Jennifer. So I just wanted to mention something. Axel mentioned when he was speaking that if a startup doesn't have revenue, that he doesn't invest in them. Am I right, Axel?
It's better to already show that you can have revenue or at least something. You know, it's good to show, yeah, especially in emerging markets, I would say, yeah. And now in 2026.
Okay, okay, but looking at the fact that the opportunities are not equal here and maybe in the US or UK market, what do you think about that, Jennifer?
Sorry, can you repeat that question?
Yeah, so Axel said he prefers to invest in startups that have
Mhm.
revenue. But looking at the fact that startups, maybe in Africa and maybe US or UK, do not have equal opportunities and equal access to maybe the right amount of seed capital or
Yeah.
even infrastructure to be able to build to a stage where an investor can invest in them. What do you think about that?
Yeah, no, it's a good question. And I think just to like strip it down a bit further, that investors unfortunately are not especially institutional capital, they're not some benevolent actors. They have investors themselves that are accountable, that want their capital back, not just their capital back, but also a profit within like a specific time frame. So, like Axel was saying earlier, like from the outset, you need to be able to show a path to profitability. Maybe you don't have it just yet, but you need to be able to articulate how your revenue model, your margins, the conditions which your business will reach, will be sustainable, and like your unit economics. You need to be able to like coherently and articulate that well. Just in terms of like when you're like pitching to different investors, and especially in emerging markets, your unit economics matter. Customer acquisition can be very hard and difficult, and it requires a lot of trust, especially when you're introducing new products into the market. So you need to be able to show how you'll be able to strip down your unit economics like this later on to just like relieve some of that pressure that some of the international investors may have like pause with. So I think, yeah, just being able to tell that story, even if you have to use like small sample groups. I know we will talk a bit later on how you can leverage the diaspora a bit more effectively. But yeah, those are just some of the things that you just have to think about. Like it's, I think like Axel said, like gone are the days where you can just raise off of a nice pitch deck and a compelling narrative. Like even like in the U.S. and other places, right? There's a lot more scrutiny. Macroeconomic conditions are very volatile. So you just need to be able to show a path to profitability even before you have the profit.
Yeah.
That answer
But
your
but
question. Oh,
but
sorry.
but then there has there been a situation where you saw a startup that is promising or is solving a problem that has a potential to grow, but then they are yet to figure out the revenue model. Jennifer.
Yes, let me have a think about that in terms of a lot of the startups I have spoken with or who I've assisted, they have all had like some traction that they can show, whether it could be like earlier customer, like for example, customers who would be willing to either pay for the service or product, right? Just through like simple like marketing channels, things like that. Some sort of traction. I think it's it's not enough to just show like an idea without how you plan to like monetize that idea. Yes, I've seen some of those and those haven't been some of the best conversations, but even able to show like even just like a mailing list at the very least, some sort of traction that like can convince that this is actually something that the market wants. I don't know if, Axel, if you have any like examples as well, but I think yeah, just even like small like efforts that you can show that people are willing to pay for this product or service, and it
I
doesn't have.
think once again, yeah, and I think, sorry, once again now, 2026, things are evolving fast, especially in the world we live in, So in 2026, I think it's very important. Yeah, you need to show already some traction. You need to show you can generate revenue. You need to show that someone is ready to pay for one of your services, even if it's a small amount, etc. You need to show it's scalable. You need to show that you can build a product because now the product is not anymore a problem. All these things, yeah.
Yeah, thank you very much for that, Axel. So the next question: how can founders leverage diaspora communities as early customers and distribution partners? How can founders leverage diaspora communities as early customers and distribution partners? Um, Jennifer, we want to take that. I think you're
I can
muted.
start, sorry, apologies. It's that time of the day. I can start very early when it comes to how founders can leverage the diaspora community. So, and I want to focus a little bit more on like the role the diaspora community is playing in terms of when it comes to venture building. So if you look at entrepreneurship ecosystems in say like for example Senegal, Cote d'Ivoire, what you've seen is that they've benefited from like a trend of returnees coming back from France or wherever they have been abroad back to the continent. So just like a few example of some founders I've spoken with. There's Paps. I don't know if you guys are familiar. So that was co-founded by Bamba, and he was a returnee from France. There's Cooley, another one that was co-founded by a serial entrepreneur who had already exited two startups in the U.S. And in Cote d'Ivoire, we had Tajama, which was co-founded by a diasporan founder who had founded and sold a company to in Latin America. And what this then does, and why I'm even talking about why it matters, is that it has helped like accelerate the development of the ecosystem because it brings networks, capital, pattern recognition, expertise, which is all crucial when you are building a new ecosystem, when a new ecosystem is developing. And these mature founders then pass on best practices when it comes to compliance and governance. Again, this is coming up again. And they also have a huge training role that they're playing. For example, a lot of these first generation founders in some of these businesses, the staff in these companies, so think like the middle managers, etc., who were in well capitalized startups. So, for example, Paps, Wave, etc., they may in the future go build their own startups or join one of your startups or something like that. And they have that like institutional capital mindset already when it comes to like how to build a data room, um, and like other compliance bits. And I know these sound like boring and not very exciting, but it's very important to developing ecosystems because it's like a domino effect. It just fuels the next generations of founders. Another way to look at how you can leverage the diaspora is access to talent pool. Unfortunately, Africa suffers from brain drain when opportunities are scarce, but there is a growing group of people who want to return back, as we've seen. Like, how can you leverage some of that talent for your own startups? And then separately, just looking at your diaspora as brand ambassadors. I'm sitting here. I'm a diaspora, and I'm very keen in seeing all regions on the continent do well, right? So looking at them as like your brand ambassadors, your early customers, your strategic partners, for mentorship and network transfer. And yeah, and I think there's a role as well that diaspora and affiliated fund managers has to play that you can leverage as well. But I'll pause on that and I'll let like Axel add his comments, and then maybe I'll share a bit later.
Okay, thank you very much, Jennifer. Over to you, Axel. I don't know whether you have any addition to this.
No, no, and once again, Jennifer, you said it all, and I totally agree with what you said. But yeah, diaspora, sometimes can be the best support and the worst. I've seen that as well myself. At the end, I see some people from the diaspora. It's always the same, whatever the country is. It's not an African thing or whatever. It's globally, but sometimes some will be very likely to invest in their own. People and country because they know this and this problem. But I'm very used to travel around the world. I'm coming from Europe. I live in Oceania. I worked in Asia, and I'm working in Africa. And it's the same everywhere. So each country has its own issues, and you can find the good or the wrong entrepreneurs in all countries around the planet at the end. So at the end of the day, it depends on the mindset of the individual itself. Are they willing to invest in first to invest, secondly to give back a bit to the community? I know very wealthy people that will not invest 1 cent. I know people not wealthy at all that will be very keen to invest. So it's a mentality issue. But that's why, back onto the things we said before, it's important to have the basics right as an entrepreneur, as a startup founder, building a project, is to be enthusiastic and to, yeah, tick the boxes on all the things we mentioned before.
Okay, thank you very much, Axel. So I think we have some questions for you here, Axel. So number one question is, what kind of sectors do you invest in, Axel?
So I think on my side, yeah, I've been doing a lot marketplaces, of course, fintechs, insurtech, and a lot of other things. Mobility, of course, as well. So yeah, I think the most that's why I like in emerging market, and especially in Africa, things that are useful for the consumer slash people at big scale. Africa has one big thing: it's the scale. It's 18% of the population, the world population today. It will be 50% of the world population by the end of the century. So that's it. The wave is unstoppable, and with a lot of macro and micro things happening, people are living longer, they're getting wealthier, they're getting, etc. So anything that can plug into that can be, of course, definitely interesting. And then, of course, depending on the countries or the regions, Africa has 5 regions: North, South, East, West, and Central. And then about the countries themselves and mitigating in there the political risk plus all the risk around. Ghana, for example, you've seen there been some risk about the currency, but some other countries it's risk about politics. And once again, it's not an African problem; it's a global problem. We see it all over the world. Dubai was very safe a few weeks ago, and now they're having some issues. So it's safe, but so it depends on a lot of things. So once again, we need to each country has its own problem at a specific time, etc.
Okay, thank you very much. And then I think there's another question. Um, I think the both of you can answer it. What makes you feel a startup is credible? What do you see that gives you the signal that this startup is credible to invest in? Axel, can you go first?
Yes. So once again, the good team with the good background, start of a product, the start of a product market fit with once again some early traction, early revenues, all that, ticking the boxes on all that, and of course a clear plan, vision, and pitch deck. I think for me that would be the most interesting. Yeah.
Okay, Jennifer, do you have any idea, any addition to that?
No, no additions. I think Axel covered it quite well. But just to echo that, at the early stage, investors are investing in you. They're investing in your ability to deploy that. So just like keep that in mind, especially when it comes to the team. You want to get people with relevance experience that who are best suited to not pitch, sorry, to solve this problem because at the early stage when traction is very minimal, when you don't have a clear path to profitability, they're investing in you firstly.
Okay, thank you very much for that, Jennifer. So the next question, if you were advising an African founder today, what three steps should you take? What three steps should they take in the next 6 to 12 months to become investment ready for foreign capital? Jennifer, do you want to go first? Okay, Axel first.
Yeah. So becoming once again ready, get a product. I'll repeat again. I'm sorry, but I think it's very important and it's better to repeat simple things. Product first. Once again, clear pitch. Product, be beginning or start of a product. Use AI for that. Spend $20 on using a AI coding machine for that. Train yourself with free YouTube videos, but have a product. Very easy to do it now because you can speak in natural language, any language, from Swahili to French to English, whatever, and you can build this product. Very simple. Get someone paying for something. Is it the small shop? Lots of informal businesses in Africa. 98% of businesses are really informal on the continent. So, and there's tens of millions, if not hundreds. So let's get someone paying for your tools. Show traction. Show real activity. The goal of a startup is not to raise money. You don't make money by raising money. If you think that, wrong, wrong perception. So you make money because someone will invest first, someone will invest secondly. It will take a few years. It will be hard. It will be harsh. But then if they get out with, capital gains, added value, then you'll do the same as well, and that's where you make money. Simple as that.
Okay, thank you very much for that, Axel. Jennifer, over to you.
Yeah, just to echo what Axel was saying, you need to focus on building lean and being efficient, especially when fundraising environments are more difficult to raise. There's a lot of scrutiny. So you need to be able, like Axel said, you can't just raise for the sake of raising. I think there was a period where we saw in the venture space, like people were raising just to survive or like, I'll just do another round, I'll do another round. Investors are not, they're not playing that game anymore. So you have to be efficient, you have to build lean. And just choose the right type of funding. I know venture capital, I will flock to it. It sounds sexy, it's great, but it has its strengths that comes with it as well. So choose the right type of funding for your startup, and just look at funding as like a ladder. You have various different stages that you can do. Like at creative, we're seeing new financing tools emerging. So have a think like, how can I do this without raising if I can? So I'm not saying venture capital is bad, but I'm just saying there's alternative routes to raising as well. There's a lot of philanthropic capital we're seeing grants, we're seeing accelerators, incubators, etc. So that's another thing I think you should take into consideration.
Okay, thank you very much, Jennifer. So we are rounding up this session. So just um, let's start with Jennifer. So this is a time for final thoughts and advice for startup. If you are to give 3 or 4 tips to every startup here on building and raising funding for their startup, what would your final thoughts or tips be? What's your final advice for startups here?
Yeah, I think just to echo some of the themes we said earlier, be if you're raising institutional capital, be institutional capital ready. Build lean, be smart, be cash efficient. Choose the right funding for you. Think about how you can expand beyond just your market. You need to be thinking geographically very early on, like how can I internationalize this? Um, yeah, I think those are the main ones. Oh yeah, I said institutional capital already. Yes, so I think those 3 to 4 tips is what I would focus on, and like a clear path to profitability. Because unlike the name suggests, angel investors and other institutional capitals are not just some angels or granola. They do want returns.
Yeah. Thank you very much, Jennifer. So over to you, Axel. What would be your final thoughts and advice? 4 tips for founders here.
I would say one, get customers first. Answer someone's problem with a solution, get him to pay on something, digitalize it. That's it. You're in business. Then you raise money.
Thank you very much.
Yes.
Thank you very much for that, Axel. So thank you very much, Axel and Jennifer, for creating our time and sharing the deep insights and knowledge you've shared there for founders here. Thank you very much for your time and everything. And thank you, founders, for joining in. So if you have more questions, you can ask in the founders community. Thank you, everyone, and do enjoy the rest of the day. Bye.
Thank you so much,
See
Pascal. Thank
you.
you, Pascal. Thank you,
Thank you
everyone.
very
Bye
Everyone,
bye.
cheers. Bye.